Greetings and welcome to the Canarc Resources Webcast. It is now my pleasure to introduce your host, Scott Eldridge, Chief Executive Officer. Thank you. You may begin.
First of all, thank you for the introduction, and thank you to Robert and his team for organizing the conference, and happy Earth Day. I will introduce myself. My name is Scott Eldridge, and I am the CEO of Canarc Resource Corp. Canarc is a junior exploration company in the gold space. We certainly are in turbulent times, but we are in exciting times for gold. Canarc has two projects with National Instrument 43-101 gold ounces and has plans to drill on new properties in search of high-grade discoveries. High-grade discoveries in top mining jurisdictions are what drives 10x, 20x, 30x returns in junior gold stocks. I will be making some forward-looking statements. You have been duly cautioned. I'd like to start with a brief intro on gold. This chart demonstrates the relationship between the S&P 500 and the Goldman Sachs Commodity Index and paints the picture for the current commodities opportunity, which includes, of course, gold. The red circles represent when commodities are expensive relative to the S&P 500. The green circles represent when commodities are inexpensive relative to the S&P 500, which is where we stand right now. I think we are 2 or more years away from a general commodities boom, but we are arguably now in the early stages of a precious metals bull market for both gold and silver. The underlying reasons are the combination of uncertain economic and financial times, QE or currency debasement, artificially low interest rates, and net inflows into gold ETFs. Gold is now separating itself from other commodities. As a financial instrument, keep in mind, gold cannot be printed and therefore cannot be debased. One of the speakers, Rick Rule from Sprott, went into this in more detail yesterday. As it relates to equities, the larger senior gold producers have already started their run up, and it is a matter of time before that cascades down to the exploration and development companies, the category that Canarc falls into. I believe we are facing a trifecta opportunity for exploration and development stage companies that are pre-production. First of all, we are in a rising gold price environment. Secondly, for Canadian projects or other commodity currency-based countries such as Australia or Brazil, we're seeing a rising gold price in the commodity currencies without rising operating costs. So as it stands right now, gold is trading at about $2,400 per ounce Canadian. Thus, there's very high margin in Canadian projects. Thirdly, many producers in the gold sector have not invested in exploration, and a rising gold price is often an indicator of increased M&A activity, where Canarc is a takeout target based on our high-grade new Polaris gold project in British Columbia. I joined Canarc about 1.5 years ago, along with a new director, to bring some fresh blood and energy into the company, and also bring in a new strategy. So what is our new strategy? In addition to the 2 projects that we have with proven ounces in the ground, we are exploring for new high-grade discoveries, and we've acquired 3 new projects that fall into that category. The 3 new projects, as well as our 2 flagships, are only in safe mining jurisdictions within Canada and the U.S. We do trade at a discount to our peers. We trade at approximately $4.50 US as enterprise value per resource ounce in the ground. And we are led by an experienced management team and board. This is a snapshot of our public company information. We do have 3 listings: the big board of the TSX, OTCQX in the US, as well as Frankfurt over in Germany. We currently have about 240 million shares outstanding, trading at 5 cents Canadian for a market cap of about $12 million, and we currently have a healthy treasury of about $2.2 million. Our top 6 shareholders control about 40% of that company. Included on that roster are Eric Sprott, the Ruffer Gold Fund out of London, Brad Cook, who's our chairman, and several high net worth individuals out of Seattle and New York. I've been in the metals and mining space for approximately 12 years. I started off as an analyst, then I ran my own merchant banking firm, and for the last 4 years, I've been on the issuer side, holding various executive roles with public mining companies. The founder and chairman of Canarc is a gentleman named Brad Cook. He's been in the business for approximately 40 years, and some of you will recognize his name. He's also the CEO and founder of a multi-silver mine operator in Mexico called Endeavor Silver. Gary Biles is our president and COO. He's a mining engineer. He's built and operated 4 gold mines over his career, one of which was the high-grade Eskay Creek mine in the Golden Triangle area of British Columbia. Our VP Exploration is a gentleman named Jacob Margolis. He's based out of Nevada, and he's been a part of 3 discovery teams on North Bullfrog, Jarrett Canyon, and Painted Hills, all in Nevada. Rounding off our executive team is Philip Yee, our CFO. Moving along to our independent directors, Deepak Malhotra has been in the business for about 40 years, is a PhD metallurgist. Kai Hoffman is our European representation on the board. He's an investor relations specialist. And Martin Burion is a CA CBV. He rounds off our independent directors. He's a specialist in corporate governance. Let's take a quick tour of our projects. So our head office is in Vancouver, British Columbia, and the 5 stars that you can see on the image there represent our projects. There's 2 flagship projects, New Polaris in British Columbia and Fondaway Canyon in Nevada. The other stars are exploration projects. So let's start off with New Polaris. This is a past-producing high-grade gold mine. It produced about 230,000 ounces back in the 30s and 40s at a grade of approximately 10 grams per ton, which is about 1/3 of an ounce. We published a very robust economic study on the project last March, where we ran the economics at $1,300 gold, which I will run through. And this is a fly-in, fly-out operation where we're looking at producing gold doré bars on site, whereas the previous operation ran it as a gold concentrate and barged that out to a smelter. The project is now feasibility study ready. In terms of location, the project is in northwestern British Columbia, about 60 kilometers northeast of Juneau, but well on the BC side of the Alaskan Panhandle. There is some existing infrastructure from the old operation, including an airstrip. And we do sit on Crown grants there, which means we own the land, which is very important when we're moving into development of this project. The mineralization type is a mesothermal gold vein system, very similar geology to the Red Lake camp of Ontario, where some very important mines have come online over the years. We do have a National Instrument 43-101 resource on New Polaris. The ounces and tonnage are spread across indicated and inferred. Again, you can see the grade there, approximately 10 grams per ton. This represents the diluted head grade to the mill, taking into account 20% mining dilution. About half the ounces are indicated and half the ounces are inferred for a combined project total of about 1 million ounces. As mentioned last March, we did a preliminary economic assessment on the project, and what we contemplated here is a 750 ton per day mill that would produce about 80,000 ounces over an 8.5-year mine life. So back last March, the gold price was much lower than where it stands now at $1,700 an ounce. The economics were run at $1,300 and generated an after-tax IRR of 38%, an NPV net present value with a 5% discount of 280 million Canadian. And the economics of this project are largely driven by the high grade. It's a very low cash cost mine where the cash costs to produce 1 ounce of gold are well under $500 per ounce. If we look at the sensitivity of the economics, you can see the gold price here runs up to about $1,600 per ounce, representing almost a $500 million NPV at $1,600 gold. These are after-tax numbers. This cartoon illustrates what the ore body looks like in sort of a 3D image. The upper left area where you can see some yellow blobs represents where the old timers were mining, and the larger yellow area represents the resource that we've defined, the 1 million ounces at 10 grams per ton, or 1/3 of an ounce, that has yet to be mined out. You can also see a selection of some of the highest grade drill holes that have come out of this project, most notably 6 meters of about 44 grams per ton, so very high grade. We'll move along to our second flagship asset, which is down in Nevada. This is called Fondaway Canyon. It also has a high-grade 1 million ounce resource on it. Given that we aren't spending money on this project, we have decided to option it out to another junior mining company called Getchell Gold. So Getchell does hold a 4-year option to acquire 100% of the project. They do, however, have to spend about $1.5 million US in exploration commitments over the next 4 years, and we would retain a 2% NSR on the project. The project has demonstrated some very significant grade over widths. 65 meters of almost 3 grams would be a highlight drill hole, and there is untested targets here with strong potential to increase the size of the resource. Fondaway Canyon is located in Churchill County, about 70 kilometers northeast of Fallon, Nevada. It is road accessible, a decent-sized land package there, and the mineralization is an organic sediment-hosted shear zone. Very typical deposits like this in Nevada have become mined. This is a snapshot of the resource table on Fondaway. This breaks it down by category into indicated and inferred, 6 grams per ton, and combined similar to New Polaris. So this project also has a 1 million ounce National Instrument 43-101 compliant resource. I'm going to shift gears now over to our exploration portfolio. The first project I'll talk about is Corral Canyon. This was a new project for us, one of the 3 new ones that we acquired. We were looking for a high-grade discovery drill hole in this project. We did drill 5 holes, and unfortunately we didn't get as high grade as we were hoping for. We did intercept some anomalous gold, and we're currently under discussions to joint venture out this project. Another exploration project for us, coming back to northern Canada. This is the Hard Cash project up in Nunavut. Nunavut is a drastically underexplored region of Canada for good reason, because it is very remote. However, it is elephant hunting country, just like Nevada. So Nunavut is home to 2 operating gold mines run by Agnico Eagle, Meadowbank and Meliadine. These 2 projects combined represent about 15 million ounces in reserves. The property that we own is in the same greenstone belt. We own about 2,000 hectares there, and we've done a series of surface exploration work there to identify high-grade potential drill targets, and we do plan to start drilling on this project in July. Another new project for us, staying within Canada in British Columbia, is the Princeton project. Recently, this has become a very hot area of British Columbia. If you can see the red area to the north of where Princeton is, called Shovel Nose, this project is owned by another public exploration company called Westhaven, and they've made a high-grade discovery on that property, thus making this now a very hot area of British Columbia. We have an option here to earn into a 75% ownership of this project. It's essentially a mesothermal vein system where the vein mineralization does come to surface, and we've done backhoe trenching there that has uncovered high-grade gold, and we're making a decision whether or not we would drill this property this year. Moving along to our final exploration project, staying within central British Columbia, this is Windfall Hills. We own this property 100%. It's about 5,000 hectares. We are in proximity to a much larger mining company's Blackwater project. It's owned by New Gold. Last year, they did receive both their provincial and federal environmental permits, and they're currently looking at an optimization study to move that project forward. Canarc has drilled this project back in 2014, where the best drill hole was about 28 meters of 1.5 gram gold equivalent, which is a very good result. And our intention is to come back and drill this project in a phase 2 program that will probably start in June. Moving along to our peer comparison, one of the ways that you can evaluate companies that do have National Instrument 43-101 resources in the ground is to calculate an enterprise value per global resource ounce. So based on that, our valuation is about $450 US per ounce, and our peers trade somewhere between 20 and 30 enterprise value per ounce in the ground. So we think that our stock is drastically undervalued, and hopefully you agree with us. Finally, in summary, as mentioned, I joined the company about a year and a half ago with a new board, a new strategy. We do trade at a discount for 50 an ounce compared to our peers, which are 4 to 5 times higher. We have brought in 3 new exploration projects, all with the potential for high-grade discovery. We are de-risking our current projects that have ounces in the ground. We are led by a team of doers, geologists, engineers, and financiers, and we are sitting on a strong cash position of about $2.2 million, very strong cash position relative to our market cap, which is only $12 million. Well, thank you everyone for listening. I'll open it up to Q&A if anybody wants to ask any questions online, or also feel free to call me or email me. My contact information is on the last slide there. Okay, so I'm just tabbing over to the Q&A here. So a question that has come up is, what are the value catalysts for the company moving forward? There are a number of catalysts moving forward. In addition to a rising gold price, we are going to be drilling on 2 new projects this year, each with the potential for high-grade discovery. And in addition to that, we are in discussions with royalty companies to potentially sell a royalty on our new Polaris project that would allow us to finance the feasibility study and further de-risk the project. And watch for our news flow over the next weeks and months. We will be extremely active on 3 projects within our portfolio. Thank you.
This concludes today's teleconference. You may disconnect your lines at this time and have a great day.